Welcome to CryptoPi, your hub to transform trading using technical analysis and risk management. Today, I'm going to talk exactly about a free tool for risk management, which will help you to compute your position size. Let's jump in. We are looking at the BTC chart in 1 hour time frame, and now we want to know if at this point, if I have to take a trade, how much should be my position size. For example, if I have $1,000 in my trading account, then what should be the amount which I can take for a trade to take an entry either for long or for short? In one of the last videos, we computed that trading positions or position size for the trade using one of this Excel sheet computation with the formula where P is the ratio of the risk which is taken to the SP, which is the stop loss percentage. And this tool over here is quite fine to use it in an Excel sheet, but in today's video, what I have for you is the free tool, which I will put the link in the description, and anyone can use this. It is very easy to use. You put in the trading amount. We said that if I have $1,000 here and I'm taking a risk of 1%, and let's say my stop loss is at 5%. So if I want to take a trade for the BTC in 1 hour chart, if I want to take, let's say, a long trade here, then I will use $200 from my trading amount, and if the trade goes wrong, then I will lose $10, which is the maximum loss, and that is the amount which I'm going to risk. Now, why does it say here max loss? It's because if I end my trade, or if I stop my trade before this, then my loss will be less if I see that trade is going in the opposite direction. Now let's look at some trades over here. All right, but before that, there is one more thing. We can flip it to the dark mode. And additionally, if you hover over this symbol, it explains you what the trading amount exactly means. In this case, it is simple. If you have $10,000 in your account, then that is your trading amount. The risk percentage is the amount of risk which I am willing to take per trade. And stop loss is how far am I going to allow the price to go in the opposite direction than my expectation before I say, all right, this is not going in my way, I have to stop my trade and take my losses. There is one more feature which I had discussed in one of the previous videos, and that was about having your stop loss greater than the risk percentage. Now have a look. If I right here, I want to take 10% risk. We see the warning that stop loss percentage should be greater than risk percentage for proper risk management. That is because if I take 10% risk for my trading amount and my stop loss is at 5%, my position size is much more. It's twice of my trading amount. Now, can one trade with this? Of course, one can trade with $2,000 if during the trade, if I take leverage of 2 times. Now, when it comes to leverage trading, it is pretty complicated in the sense that we have to consider what is the fees, at what point my portfolio will be liquidated, and how do I manage my stop loss when I already see the trend going against my expectation. And although it is fairly easy to compute the position size with leverage, if I do not have the right experience to trade with leverage, then it's quite likely that I will lose all of my money. That is all of my $1,000 here if I get liquidated. And that's why it is very risky. And to avoid such high risk when I'm still learning, when I'm still playing around and doing paper trades, it's better to have my stop loss more than my risk percentage. And in this case, you see that my maximum loss would be $100. My position size will be 600, and I say I stop at 15%, I get out, and my loss is $100. I still have 10 more, or after losing $100, I still would have 9 more trades. Let's say if I close here to 9, then my next position size will be 600 and I will lose 90. So you'll have much more number of trades to be taken if we follow this rule that risk percentage should be lower than the stop loss. At some point when I feel confident about taking trades with higher risk, and if I'm able to manage the leverage, if I understand the dynamics of how leverage works, then obviously it is perfectly fine to take the risk percentage and stop loss same, or even stop loss at a much lower value and take a leverage of 2x. If I want to be adventurous, maybe I can take a leverage of almost 10x. But I have seen in some forums and some chats that people take pretty high leverage and they're still able to win this trade. And this is, in my opinion, very risky, but everyone can decide what is their risk amount. All right, going back to our $1,000 trade amount, and let me put risk percentage as 1 and the stop loss percentage as 2. All right, where were we? Here, the BTC in USD pair. Now what I have here is the 3 indicators which I have been discussing in the last couple of videos, and the first one I will switch on is the CryptoPi triplet, is the custom indicator. And here let's switch them off for a minute. Right, what you see here are these lines which are helpful to identify the stop loss, because this particular levels they tell us where the reversal had happened in the last few candles, and it in some sense also provides a trend. So if the lines below the price action is green, it indicates an uptrend, and when it is red, it indicates the downtrend. Now switching on the strategies, if I switch on all of the strategies, we see that the ones which are red ones, they tell us to take a short trade, and these ones, they tell me to take the long trades. Now if I would start somewhere here, which is number 5, my stop loss, I could take it at the blue one. However, if I want to have additional confluence from this stop loss band, it still tells me that the price at this point has not completely went into the direction of going downwards. So there is still some strength left for the price to go upwards, which does happen very briefly for 2 candles, but then it reverses. Let's say we are slightly a risk taker because we now have the risk management tool, and what I would do here is I'll take the short position tool, and when I'm I'm shown that, all right, here is time to take a short position, I'll drag my stop loss to this blue line, which is just the extremum for the stop loss. So basically for the trend upwards, this is the stop loss, and its opposite will be here, which is the blue line. And that usually you can call it extremum, or the two extremes of the channel. But never mind, that's not the point of this discussion. What we see here is that the stop loss is at 3.35%. Now going back to the tool, what I will do here is, if I have 3.35%, my position size becomes $298. And in this case, if the price would, from here after the two candles, if it would have reversed like this, and it would have crossed this level of 3.35 from my entry point, then I would have lost $10. But it is also possible that as soon as I see price going up and I see that this indicator has still or this trend is still going on green, I could also decide to stop early or end my trade or exit my trade early. In that case, I will not hit my max loss, but a loss of maybe $3 or $5 or something like that. Now, let's remove these two things. And now how would I trade with more confluence in identifying the direction? I can switch on the trend indicator, which I discussed as well, which was the quick moving averages, and they move fairly, they flip their colors fairly quickly as soon as the price action changes. So if I'm trying to, let's say, ignore this, and I'm using this SL band only for stop loss, and I have confluence from the trend, then taking a trade over here can still give me some good confidence that, all right, all the three, oh, okay, not sure what happened there, never mind, that all the three moving averages are identifying me a bearish trend. So it's okay to take a trend here. And one thing which I want to mention here, let's say my trade is taken here and I'm at 3.35%. Now my reward can be anywhere. My risk to reward can be either 1 to 1 or 1 to 5. But the way to proceed in this case, or the strategy which I find much better to take on, is as soon as the price crosses a certain level, that is, if it has crossed below this trend or stop loss band, and again it gets rejected, so it stays below this, then I would move my stop loss, I would dynamically move my stop loss to one level below. So now my risk has reduced, but my position size remains the same. I reduced my risk almost by half, so my max loss has reduced. And if we see that the price continues going further down, then I can move my stop loss almost at my entry point. So no matter what happens, I would not lose my $10. What I will lose is, of course, the fees which I would have paid to take the trade. But I can always end my trade at that point, stating that I have no loss and my risk to reward is pretty high. All right. Let's take one long example as well. In this one, I think this would be a failure example. Again, it depends failure because we are considering in this one, actually there is no stop loss coming. It's a similar case like the short one. Our stop loss would be far away, that would be 4%, and we do not even cross the first level of the resistance, which is from order block theory, which we discussed very briefly, that here we have a bearish order block and it's not able to cross the bearish order block and gets rejected. So if it is not able to cross it, it's quite likely that if I do not end the trade before it reaches my stop loss, I would lose my $10. In this case, my position size will be computed based on the stop loss, which is far by 4.16%, and my position size is $240. Now, make a note that if I increase my risk percentage, my position size increases, my risk amount decreases, so that is my max loss increases, but at the same time, when I will make profit, my profit will be also more. It's the game of risk and reward. So the higher the risk, the higher the reward. At the same time, the point of taking higher risk is not to get wooed by I will get a higher reward, but to always keep the risk as a very critical point in mind, that risk means we are losing money. If we, after let's say 10 trades, if I do not have any more money left in my trading amount, there will be no way I would be able to make more profit. So risk has to be taken very seriously, and how much risk percentage I define here has to be thought very critically, that I cannot just put 20% of my trading amount as the risk for one trade. Let's say even if I have put 25 stop loss percent, it's still all right, but my risk amount is 200. So if the trade goes wrong, I lose 200 and I only have 5 opportunities to make a trade. Okay, maybe let's take an example where we do achieve a risk to reward ratio of at least 1-to-1. Let's say here in this one, which is 5, again 5, I take a short trade here with my stop loss on this point at 3% far away. Our SL band shows a downtrend, so the red line is here, and my risk percentage is 2%, let's say this time, and I am risking 3.12 if I'm at 3.06. And my optimal position size is $653. And in this case, I would like to go for a reward of, if I go for a reward of 1-to-1, my trade will end after, if I start the trade at 16 hours, 1600 hours, then I will have to wait a couple of hours, almost 8 hours. Yeah, and then I would be in profit of 3.26%. So I will have $20 in my profit. But as soon as I have reached here, I can bring my stop loss almost to the entry point and then let the trade run however far it can. And if I see the price moving further, I can continue to bring my stop loss further down And this type of strategy is usually called dynamic trading strategies, dynamic stop loss. You always keep moving the stop loss the way the price moves. Of course, it has some risk that if I start moving the stop loss earlier, then I can get stopped out much earlier than, and not having room for price action to fluctuate and reach to some fair value gaps. All right, I think for today's video, that would be all. Do check out the tool. The link will be in the description. And if you like the content, do hit the subscribe button. I have made the life a bit simpler. If you like this tool, then hit the subscribe button here. You can also support me by buy me a coffee. You can hit this tool, have a look at it. And do check out some other videos. I have created a playlist and would be nice to hear some feedback in the comments. I'll see you in the next one. Bye-bye.